It's Friday, the 23rd of July, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. BHP signs a deal with Tesla as investors plough into local miners who dig up metals used in batteries and electric vehicles. That's our main story. Also coming up in today's podcast, the ASX hits a new all-time high as investors look beyond COVID. The Prime Minister apologises for the dreadful state of the vaccine rollout, and airlines warn that job losses are close if the lockdowns continue. Then stay listening for my chat to a man who turned his digital marketing agency into a $50 million business. But first, here's a brief look at markets. Wall Street rose overnight after strong economic news in the US. US home sales rose for the first time in 5 months, although jobless claims unexpectedly climbed. The S&P 500 and Dow Jones Industrial Average were both up 0.2% in afternoon trading, while the Nasdaq was 0.4% higher. European markets were generally better, with the Stoxx Europe 600 up 0.6%. The significant exception was London's FTSE, which dropped 0.4%. The European Central Bank pledged to keep interest rates low for longer overnight. The S&P ASX 200 hit a record high yesterday, closing up more than 1% to 7,386 points. The bourse regained all the losses of earlier in the week and more. Despite another surge in cases of community-transmitted COVID-19, investors bought into stocks across the board. The only index to go backwards, ironically, was the healthcare index. The banks did well, with Commonwealth Bank, ANZ, National Australia Bank and Macquarie Group all rising by more than 1%. Transurban was 1.6% higher and Telstra was up 1.3%. It was a strong night for oil prices. Brent crude was up more than 2% and is fetching close to $74 a barrel. Gold prices were a touch higher, and the Aussie dollar is trading at 73.8 US cents. BHP has signed a deal with electric vehicle maker Tesla to supply nickel from its mine in Western Australia, signalling a shift in focus for the big Australian. On a red letter day for miners of metals used in electronics and electric vehicles, the share prices of lithium miners Pilbara Minerals, Orocobre and Galaxy Resources all jumped 10% yesterday, the first two after strong production reports over the past 48 hours. And Lynas Rare Earths, the country's largest producer of rare earths used in electronics, jumped 9%. Metals used in electronics are forecast to be in short supply over the next decade, and companies producing them, particularly outside China, are in demand. The share prices of the four I just mentioned, apart from BHP, have risen by between 150% and 425% over the past year. In BHP's case, the company will sell some of the least carbon-intensive nickel in the world for use in batteries in Tesla vehicles and storage systems. It's not huge financially, but it fits into Chief Executive Mike Henry's push to embrace future-facing minerals. And it comes days after media reports suggested BHP was considering selling its oil and gas business, both operations with a big carbon footprint. Mr. Henry wants BHP to become more value over volume. Iron ore is a volume play, copper and nickel, because of their roles in electronics, are value plays. The deal with Tesla puts BHP in the right company to expand into new technologies that are less carbon intensive. The world is going green, and yesterday was tangible evidence of its impact on corporate Australia. There was more last night when Japan said solar, wind and hydropower will make up more than a third of the nation's power generation by 2030. And remember, Japan is Australia's biggest coal market. Investors recognise the trend and are pushing share prices of lithium, rare earths and nickel miners as opposed to oil and gas. It's going to be a whole new world. In a moment, the rest of the news you need to know this morning. In overseas news, a once-in-a-millennium flood in China has affected more than 3 million people and killed 33. It isn't unusual for China to have major floods, but increasingly they're being blamed on climate change, which is influencing Beijing. Global giant UBS has launched a portfolio that invests in hedge funds led by women. The Carmen portfolio will pick 10 to 15 funds globally where a woman has the sole or joint discretion over investments. Investing has previously been dominated by men. In fact, it still is. But in more recent years, there's been a push to diversify investing so that it better reflects the world we live in. And life expectancy in the United States fell by 1.5 years last year, a rate not seen since World War II. The figure dropped down to 77.3 years, with life expectancy for Hispanics and Black Americans hit particularly hard. More than 3.3 million Americans died last year, the largest number ever, reflecting the COVID pandemic. Locally, the Prime Minister, Scott Morrison, yesterday apologised for the poor rollout of COVID vaccines and said he wants to fast-track pharmacists administering jabs. With his political fortunes wavering in the face of the slow vaccination program, Mr Morrison said the country had turned the corner and now 1 million vaccines were being administered each week. The number of community-transmitted COVID cases in New South Wales yesterday was 124, of which 48 were infectious while in the community. That's 38% of them. So far, the lockdown is only having moderate success, though it still needs to run longer to have a proper impact. Premier Gladys Berejiklian said the full impact wouldn't be felt until the weekend. There have now been 1,652 cases in the state, and there is no end in sight to the lockdown. In Victoria, the news was much, much better. There were 26 cases announced yesterday, but only 2, or 4%, were infectious while in the community. In South Australia, there were 2 new cases. Meanwhile, the Therapeutic Goods Administration said 2 more people, both in their 40s, had died from the rare blood clotting disease linked to AstraZeneca. Airline workers looked like they could lose their jobs, at least temporarily. On the back of the most recent shutdowns, Qantas is operating at less than 40% of its pre-pandemic domestic capacity. Virgin Australia is at 50% of where it was 1 month ago. Neither Qantas nor Virgin would rule out stand-downs yesterday. So far, Qantas has literally lost billions of dollars during the pandemic, and Virgin early last year, of course, went into administration. The competition watchdog is focusing its sights on online marketplaces like eBay, Amazon, Kogan.com and Catch. The COVID pandemic has triggered a surge in online shopping. We all know that. And the Australian Competition and Consumer Commission yesterday announced an inquiry into people's experiences online. Zipco's share price tumbled nearly 8% yesterday, despite the group announcing that revenue doubled over the June quarter, as its US business grew quickly. Total revenue was $130 million, about half which was from the US, but analysts didn't like that Zip hadn't hit customer growth expectations in the world's biggest economy. Co-founder Peter Gray defended the quarter, saying while they hadn't hit the numbers of customers, they were getting more out of the ones they had. AGL Energy, one of the biggest polluters in the country, will give shareholders a vote on its climate reports for its soon-to-be demerged coal power Accel business and its retail-dominated business AGL Australia. It will be a non-binding advisory vote on climate reporting, meaning its power will be in its influence. Woodside Petroleum, Santos, Rio Tinto and Oil Search have all agreed to similar votes. Coles will drop its Little Shop collectibles promotion, ending one of the most successful sales campaigns in the group's history. The miniature replicas of grocery items were given away once a certain amount was spent at the cash register. Basically, they don't fit into Coles' sustainability plans because they weren't environmentally friendly. Evolution Mining will purchase a number of assets from fellow miner Northern Star for $400 million. The announcement came as Northern Star appointed a new CEO and reaffirmed its profit guidance, which sent its share price up 5.4%. It came as market leader Newcrest Mining said it was on track to meet guidance. The good news is that while production is strong, the cost of producing it has fallen to a record low. That means a higher profit margin. The gold companies have struggled more recently as the price of the precious metal fell. Newcrest share price finished 0.4% higher yesterday. Australia's trade surplus last month hit a massive $13.3 billion, with both imports and exports up by 8%. The new monthly record was underpinned by a 6% jump in iron ore exports, taking total sales above $40 billion for the first time. The big increase in imports came from petroleum products. In other economic news, payroll jobs fell by 1% in the fortnight to 3 July, the beginning of the lockdowns. That is going to get worse. The banks and regulators want a parliamentary committee to probe restrictions Apple has placed on third parties accessing the payment functions of its iPhones. The local players want to ensure the fast-growing market for digital wallets is competitive, according to the Financial Review. With Apple Pay and Google Pay growing in popularity, the banks are worried that the tech giants can preference their own products over the bank apps. Seven Group, controlled by Kerry Stokes, now holds 59% of building materials company Boral, having offered $7.40 a share. The takeover offer is open for another 2 weeks, and when it closes, Seven is likely to make changes at the top of Boral. Liquidator Grant Thornton has concluded its initial investigation into the collapse of Greensill Capital, the supply chain finance group. Greensill was the lender to Sanjeev Gupta's GFG Alliance and almost triggered its collapse and affected the Whyalla Steelworks. Anyway, Grant Thornton said Greensill became insolvent on or around 2 March, a week before it filed for administration. LNG and oil producer Santos has posted record quarterly sales, and the group said it was on track to generate more than $1 billion in cash over 2021. The group has slightly upgraded its earnings for the full year, but it said nothing of the $23 billion bid for Oil Search, which has been rejected by the latter's board for undervaluing the company. Beleaguered tech stock Newey will drop out of the ASX Top 200 6 months after it was added, on the back of its market capitalisation having halved since February. Others likely to leave the index at the next reweighting include NRW Holdings, G8 Education and West Gold. It matters because many investors look for top 200 companies or put their money into passive indices that reflect the ASX 200. And good luck to all the Australians competing in Tokyo over the next fortnight. It was a great start yesterday with the women's and men's football team both winning, the latter against powerhouse Argentina. As always, up next is our daily interview, and it's something a little different today. Sabri Subi is the founder of King Kong, a digital marketing agency. He started his company with just $50 8 years ago, and it's now valued at more than $50 million. We talked to him about how, in difficult times, to find the balance between just focusing on what you know and looking for the opportunities to grow. It's an interesting chat with some very clear advice. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Friday, the 23rd of July, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.